What's going on, guys? In this video, I'm going to be breaking down our trades that were taken on USDJPY. As well as taking these trades ourselves, these trades were also sent into the signal group for our members to take advantage of. I'm going to be breaking down the analysis behind the trade, as well as the entry, the stop loss, and the take profit. I hope you enjoy. Right, guys, so starting on the 1 hour time frame, we're going to start off by just talking about the analysis behind the trades, because there's more than one trade here. So since from like last week, we've actually taken four trades on USDJPY, which we'll be breaking down. But just to start with, what we like to do at Hands3Trading is we like to look at the analysis and really understand where is price heading and how can we capitalize on all types of movement. Because although, yes, as you can see, price is uptrending, but however, this is the 1 hour time frame, and the 4 hour, the daily price is definitely uptrending. You look at USDJPY, it's in this massive bullish trend. However, that does not mean that you can't capitalize on selling positions on the lower time frames. If you can focus on where price is heading, then you can definitely capitalize on sell movements as well. They're just a little bit riskier, but if you use the confluences behind it, you can definitely capitalize on it. And there's no point always just waiting for buys. You can take sells as well. And that's what we're going to look at now. So the analysis behind this trade, behind the USDJPY, like the movement and such. So we were looking at price here, and we had basically formed this bullish impulsive move to the upside. And then we started to see this correction here. As you can see, it's almost like a bullish flag. So we made this bullish impulsive move, and then we corrected to the downside. And then from here, we formed this second bullish impulsive move. And we thought, okay, price is just going to repeat itself, because price likes to move in impulses, corrections, followed by continuations. So that's what we're looking for. So after we saw this bullish impulsive move, especially the fact that price had left this gap in the market here, this massive bullish candle in the 1 hour left some gaps. So we at Hands3Trading knew that price had to fill this gap. It was like there was a higher probability that before price continued to the upside, price was going to come down lower and fill this, which you can see it did actually do. But we're not just going to talk about that. We're going to talk about our trades, our thought process behind it, because that's what really matters in trading. Doesn't matter if you get the direction right. Were you capable of actually getting in, getting out at the right times in the market? That's what makes a trader. Anyone can say, yep, I knew that was going to go up. Okay, but did you capitalize on it? If not, then it doesn't matter. Anyone can, it's a 50-50 chance. It goes up, it goes down, but can you actually capitalize on the movement? So what happened? So from this moment on, already we're like, okay, price needs to come down to here, anywhere in this area, which it did to perfection, but we're not going to talk about that. So from this moment on, we're looking for sell positions because we're aware that price needs to come down before it continues up, which it did. So this is our sell position here. I will drop down to the 15-minute time frame for this one. So we're looking for some sell confluences from here. So the way we like to trade is very, very simple. We don't like to overcomplicate things at all. So you'll see a lot of people trying to overcomplicate things. Trading is not, you don't need to overcomplicate it. The strategy and the technical side of things is a very small part of trading. As a lot of you know, it's all the mental side, it's all the psychology, and it's all risk management, which is the most important things. So we like to keep it very simple. We have a bias, we have our confluences, we have the higher probability of one thing happening over the other, and we go with it. So what is happening here in the market? Prices impulse to the upside. We're seeing a resistance here, and we're also seeing a support through here. So to anyone who hasn't looked at the overall analysis of this pair and doesn't understand that price does need to come down first, is going to think, okay, so we've impulsed, we're correcting, people are going to think that's going to happen next, we're going to push to the upside. But we know, because we've done our analysis, that the likelihood and the probability, it's never impossible, it can happen, but we know that the likelihood and the higher probability is that it's not going to happen. So we're looking for sells. So what made us enter this trade is we saw a breakout to the bottom here. So at this moment, I'm going to get the pen out. Here, I'm going to draw. At this moment here, we saw a breakout to the downside. And that was in the morning. So that's like London open. We're seeing this breakout. So we're saying, okay, the market's open now. And we've seen it open with a close to the bottom. So something's happening today. So like the traders are active and they're not driving price up. So they're driving price down for a reason, and this is what it's for. So that happened. We broke to the downside. We saw a little correction to the upside, and that was our entry. I'll pull up the trade that was sent into the group now. So this is the trade that was sent into the group now. Feel free to pause it. It's got the entry, it's got the stop loss, and it's got the take profits. So this trade was interesting. So straight away into profit. But then what we did was, once it hit our TP1, which is at a 1-to-1. So bearing in mind, these are they're like checkpoints for us. So at each of these take profits, they're checkpoints. And what I mean by checkpoints is, for us at Hands3Trading, it means that's where we have set our alerts, and it's a decision-making point. Are we going to take profits? Are we going to take partials? Are we going to move stop loss to break even? Are we going to trail stop loss to here? It's a level where we're going to make a decision. And in between then, we're not looking at the chart. We're not doing anything apart from getting on with whatever we're doing throughout the day. We're not staring at the chart. We've set these levels, and once these levels are hit, we're going to then make a decision. So TP1's hit. What then happened was we decided to trail our stop loss to break even. Now, what actually happened was we pushed down a little bit further into profit. We then pulled all the way back, and luckily, because of the broker that we're using, we were so lucky not to get stopped out at break even. I say lucky, but it comes around, goes around, that type of thing. So we just missed the break even level. And some people who got in maybe a little bit higher, they definitely wouldn't have got hit as well. And then what happened was we shot down again, and we actually hit TP2, which was at 1-to-2. So what happened here? This is our next checkpoint. What happened here? At 1-to-2, we then trailed so we could have taken profits. So we didn't do so. We then trailed our stop loss into a 1-to-1 level. So our original target was obviously a 1-to-3 down here. Reason being for our target is because it's just a support level in the market. That's where we're going for. So when you're trading, don't try go for gold and go all the way to the wick as a target. It's not smart. Just try and be happy with some profits a little bit lower down, because you'll be scratching your head once it comes to here and you start to see wicks and all that kind of stuff. So yeah, 1-to-3 here is what we're aiming for. However, as you can see, we didn't reach it. Unfortunately, we were very close, not that many pips away. And then we pulled back all the way to a 1-to-1. So full transparency in the signal group, as you can see, we took profits at a 1-to-1 for this. And thank God we did, because as you can see, price did a madness that day and actually whipped to the upside, and we pulled all the way down to there. So that's a perfect example of why you've got to be happy with targets, because if not, you'll probably get humbled and get stopped out, and then price will go your way. So yeah, that's the breakdown of the first trade. Let's now get into the second trade. Okay, so now price has reached the level, the area where we kind of predicted price to go to. We're no longer going to be looking for sell positions. So a lot of people, they see this massive bearish candle, they're completely ignoring what's going on in the market, and they think, oh, okay, price is bearish now. But if you look at this candle, this was clearly just a liquidity or just a stop hunt candle, just basically price going to where it needed to be. That's a perfect example of a candle going where it needs to go to. Because look, from that moment on, we saw no bearish continuation, no more bearish movement. That was a candle where price needed to go to that level, so it went to that level. And then from here, we just continue bullish. So from that moment on, I'm only looking for buy positions now. So the time of the day is very key here. So that happened at 7 p.m. I don't like to trade at those times. We only like to take trades London, New York, the crossovers, where there's a lot of volume in the market. Because trading in these lower time frames, we don't like to be in it for a long period of time. On the lower time frames, it's more in, out throughout the day. But anyway, the next trade. So the next trade was on the 5th of May, and it was taken at around 11 a.m. I'll put the signal up now so you can see the signal was taken. The signal was sent into the group for members to take advantage of if they wished. So analysis behind this trade here. So early morning, look at the time. The timing is very, very key here. So 3, 4 a.m., 5 a.m., 6 a.m. If I'm totally honest with you, I probably would have got in the market down here, but we weren't awake. Let's be honest. So we allowed price to move forward. We broke above this high. So let's talk about this. So this is the most previous, let's say, lower high. Price formed this double bottom here. And then we pushed and we broke that high point. So right here, we know that price is going to move bullish. I knew price was going to move bullish down here. We knew Hands3Trading, we knew price was going to move bullish from this moment on because of our analysis. So we were just looking for our entry points now. So price broke above this high, creating a new higher high in the market. This is basically confirmation here, extra confirmation, which we didn't really need, but we had it anyway. That's why this trade was basically perfect, which we'll talk about now. And then we basically allowed price to pull back and we got in at this level here at 129.610. That's where we entered the market. And as you can see, price took its way up to take profit here for a 1 to 4.5. So key thing with this, however, is as you can see in this trade, I believe we closed early. So I believe it's this trade. We closed early on this trade because we saw something in the market. I think it was a time of the day as well, actually. What time was it? Okay, yeah. So we closed early on this trade. I believe we had a 1 to 6 target. We took out at 4.5. So we just closed 1.5 less. Now, there's a lot of times you'll see in the market people say, oh, you've got to have discipline to hold the targets. You've got to do this, do that, just trail your stop loss. It's not the case. You need to make an informed, strategic, calculated decision. And the reason being is because, well, there's loads of reasons for it. So we're running at 4.5%, 4.5 risk to reward, right? And we're starting to see the momentum slow down. It's 5 o'clock in the afternoon, it's 6 o'clock in the afternoon. Do I want to take 4.5 risk to reward, or do I want to hold out overnight, wake up in the morning and my trade be stopped out for less, for my trading stop loss? Or would I rather just take 4.5 off the table, bank it, and be happy with it? Anyone would be happy with a 4.5 risk to reward. If they're not, they're lying to you. They would be happy with that. So we told the group we're exiting now at 130.510. And yeah, as you can see, it was a great decision because we probably would have trailed our stop loss to like a 1 to 3 and it would have got hit. So it was the right decision to do. It was the right thing to do. Obviously, you can look at it and go, oh, but it's gone. Look at it, it's gone to the moon. It doesn't matter. I would have probably there's no way I would have held that. We would have held that. Sorry, there's no way we would have held that to higher with all the up and down movement that's happening in this market. So yeah, 4.5 taken on that, as you can see in the screenshot. So far on USDJPY, we're +1, +4.5, we're +5.5 risk to reward on USDJPY just from this analysis. Next trade. So we saw that pullback, we then impulsed. So let's have a look. What have we done? We've got this as the new higher high in the market. We've got this as the new higher low. And then again, price broke to the upside overnight, creating this new higher high. So we're still uptrending. We're trying to capitalize on all the moves possible. Now, this trade here, we did actually get stopped out for a -1 risk to reward, but it's fine. It does not matter whatsoever. We stuck to our plan. We took the trade accordingly. We did nothing wrong. We can't fault ourselves for this. It's just one of those things. No one's invincible. No one's going to get everything 100% right in this industry. You got to embrace the losses. You got to not take it. You basically got to not take it as a loss, because when you take something as a loss, you learn from it. This isn't something where you learn from it. This is something that you just take on the chin and add it into your diary. Boom, move on to the next. A lot of people will try and take every single loss and try learn from it. And then next thing they know, they've got a book about like a strategy and about things to do. Like no matter what, there's a possibility you can be wrong in this market, and you've got to take it on the chin. You've got to understand what percentage you are right against your risk to reward, and then as long as you have that, you're going to be up in the long term. But anyway, simple analysis with this one. There was an impulsive move to the upside over just before London. There was this correction, so we expected the bullish movement, which you can see did happen. And yeah, we entered just around the London Open, just after London Open, before New York. We got taken out by New York volume. I believe this might have been news inflicted. I'm not too sure. I don't really look at news too much. We don't really take that into consideration, pure price action. But I believe we were taken out just for a little bit. And then as you can see, it did go into profit. So unfortunate, it would have obviously hit target, but we take it on the chin, we move on. Right guys, so on to the last trade that we took today, actually Monday. The reasoning behind it, and I will also put up the signal on the screen now so you can see that it was sent into the chat for the members to take advantage of. So, reasoning behind the trade. So obviously the analysis previously was we're expecting a pullback into this level. This level was then hit, and then we expected price to reach this resistance level. But what is actually happening at this resistance level? What has happened once we reach it? There are going to be a lot of buyers in the market exiting their positions. So there's going to be some kind of sell-off. There's going to be a moment in the market where there's going to be more sellers than buyers in the market. And we're going to see some kind of sell-off from this level. So this is obviously, we've seen it happen, but I'm talking before this happened. That's what we were expecting. That's what the analysis was based off. So we know there's going to be sell-offs from here. So let's jump down to the 15-minute time frame and start looking for our positions, start looking for kind of the evidence that we need to enter this market. So this push here for us was the kind of final push from buyers, the kind of final push to their take profits that took place. So we know that was the last kind of push, but we needed evidence that was actually it. So technically, let's get up the drawing. Technically, this is the higher high in the market because we made a higher high. We then pulled back, we made this higher low. And then what we're expecting price to do here, if buyers were to continue taking control of this market, we're expecting price to form a higher high. However, as you can see, we didn't do so. And instead, during London Open, so that's when we would expect the volume to kick in to see price move higher. However, what we actually saw was wick rejections to the upside, kind of forming this resistance. And rather than forming a higher high, we formed a lower high. So that was the kind of reasoning for our entry, and our entry was here at 131.163. Stop loss just above this lower high. So yeah, I'll put a signal here. As you can see, it's the exact entry, the exact stop loss we used, and the target that we used was is a 1 to 6. So where we expected price to kind of go into was this level here, which is where you can see price is currently at now, which would have made the trade like a 1 to 9. However, we're obviously not going to be that greedy in the market. The reason being is because, of course, this market is still uptrending. So remember earlier I said we were expecting a sell-off. We don't know how big, how small. We just know there's going to be some kind of sell-off. And as you can see, the momentum kicked in beautifully at New York. So we kicked in and we basically went straight to take profit. There was no need for any trailing stop losses or anything like that. We literally looked away, come back to the charts, and our take profit's been hit. So with that being said, if we were to kind of hold down to here, as you can see, we probably would have got stopped out at some point on a trailing stop loss. This move here, this big move here, is obviously a pullback, and we did reach the take profit, but we would have most definitely trailed our stop loss at some point to this level or even higher, and we would have probably got stopped out on our trailing stop loss for only a 1 to 3. So we actually were capable of catching a 1 to 6 on this, when in reality, if we didn't and we held, we probably would have actually got stopped out. So it's all good. Some of you might be saying, oh, but look, it's gone even lower. But no, look where we exited our position. We did see a pullback from that level. That could have easily continued higher and higher and higher, where if we didn't even move our stop loss into profit, we would have got taken out at break even or stop loss. So you got to be happy with what we had. So just like kind of totaling up what we produced out of USDJPY, you can see that we made a +1, plus 4.5, that's 5.5. We then took a -1, so back down to 4.5. And then today we took a +6. So totaling at plus 10.5 risk to reward on USDJPY. Right guys, so I hope you took something valuable away from this video. I hope it was clear. If you do have any questions on the video or on the analysis at all, don't hesitate to drop us a message. I'll put mine and Ryan's Instagrams in this video, and our Hands3Trading business page on this video as well. If you want to get involved in the Signal group, feel free to message us as well. Send us an email, hands3trading@gmail.com. As well, if you want to join the Signal group, we do say this to people. So some people would actually like to have access to the Signal group, just to look around it, see what time the trades are placed, if they would have caught them. That's absolutely fine. Just message us. We'll grant you access for a couple hours, an hour or so, just so you can have a look. And if you're happy, then you can join. But other than that, until next time, guys, see you later.